All right, welcome in everybody. Jason, TCP Super System, Memecoin explosion incoming. Dogecoin, I got a special one for you tonight. Again, TCP Super System creator put this system together over 2 to 3 years to identify opportunity zones in cryptos and stocks. Again, the system signals interpretations in my trades may not be suitable for you, are not financial advice. Please consult a licensed advisor before taking any action or making any trades. So, on the screen, again, for those new, three-part system, standard deviation, mean reversion methodologies at the top, main indicator where you're going to see basically trend reversals, support resistance lines, and what our favorite, I guess, signal is, and that's our diamonds, three color, green and red diamonds, three shades of those colors. And then at the bottom are our three hot sensors, which is really just a price action indicator when we think things are getting cold or hot. Again, this is just used to identify those opportunity zones where I take action. But again, you got to do your own research, make your own decisions. So, why do I want to talk about Dogecoin tonight? Well, before I talk about the chart, I want to show you this little thing I put together from outside resources. And this is the Dogecoin ETF applications that are incoming. Now, we all know that the government shut down almost 30 days now, I believe. I would expect them to be back on board here pretty soon because if they're not, I think you're going to start seeing some issues with the airlines. And I think they'll start seeing a lot of pressure to get back in office and get their act together because this is ridiculous. But again, a lot of these initial filing dates for these Dogecoin ETFs are pretty old, going back to January, February of this year, April, January. And of course, they've delayed and delayed, just like they did every other ETF application out there. Now they have this abbreviated format that they can fast track. But I want to show you something. Outside of just the expected decision dates here, we've got October 17th, which is already passed, obviously. The 18th passed, October. So honestly, as soon as the government's back online, I would expect Dogecoin to be one of the first ones to have ETFs coming, and that's crazy. And I'll be honest, this is what people don't understand. These ETF inflows are going to drive enormous volume, and I want to show you something. And we're going to go on the low end here. Look at this, and this is Bitwise, Grayscale, 21 shares, Rex Shares Osprey. Four major players, right? We'll start at the bottom down here. On the low side, expected inflows 5 billion, 8 billion, 12 billion. Let's just call it 8 billion, even though it's 8.85, but we'll say 8. So that's 33 billion dollars of expected inflows coming for Dogecoin. I'm no expert. I'm just a crazy guy on the internet with a great system that helps me exploit opportunities, but good gracious. That's going to be remarkable for Dogecoin, I believe. Again, not financial advice. So let's look at the charts. And again, daily view on the left, weekly view on the right, and we'll go over both of these since this is a dedicated to Dogecoin tonight. We're not looking at anything else. But I want to show you something. I've highlighted some opportunity zones on the Dogecoin chart. On the downside, we're looking at basically, we'll just say 0.178. So let's just call it 18 cents, right? Basically 18 to 19 cents. It's trading at 20 cents. That is a leveraged liquidation zone. Is it going to hit here? Likely. But let me ask you this. On the upside, we've got another liquidation zone identified at roughly, let's just say 27, 28 cents. Even from here, that's a 40% return from 20 cents to 28. Are you going to fight over 2 cents to get 40%? I'm not. Now, my question for me is how much am I going to liquidate from something else to pump into this thing? Because, in my mind, I have to front run the ETFs. There's no doubt, no question about it. Now, I'm not telling you to do that because I am extremely risky with my trading activities, and not everyone has the same risk tolerance or objectives, so I have to put that out there. But I'm just telling you what I'm likely to do, and I haven't even done it yet. But obviously, we have significant holdings, so there's plenty to liquidate from. I just need to decide which one I'm going to do. Now, you can see here we had that pump down like we always tell people. It retraced back to the cloud like we always tell people, and it resumed at the downtrend. And so now, where are we? You'll notice we're basically in the cloud, or right at this tip of the cloud. That is an area of volatility historically. We're also at the 200-day moving average on the daily view. Coming from below, that's an area of resistance. If we break it, it becomes support, right? But typically what we see is you'll get this pump up, a retracement back to the cloud, then off it goes. Now, this one, we're very close here to seeing a potential trend reversal fire. We're not quite there yet. But this thing with this resistance here, and look at this, we in our standard deviation and mean reversion methodologies, you can see we pumped up to those extreme zones at the top, which is where we want that line to be. That's our fast line. Orange and blue are slower, blue being the slowest. But typically what we see before our huge run up is the white line will be up in the extremes, the orange line will be penetrating up through the green zone, and blue will be approaching the green zone. That's typically the firing point. Now, we don't see that here. We're still, let me zoom in here so you can see this. We're still well below that green opportunity zone there, and this has already turned back over. And more times than not, this thing could easily pop back up here, and this thing could begin that upward tracement. But if it does that, I think we're off and running. Most likely to this would be our next stop up here around 23, which is, again, more than 10% from here. And then likely, that's when I think we typically would see the perfect pump up. Then you'll get the retracement back to that new cloud formation, which at that time would most likely be green. Usually when it hits the top of that green cloud, then boom, off it runs. That's what I'm hoping for here. Granted, you can see, we've had some diamonds down here when we got that scam wick, just like we did on all the other cryptos. But I would say we're kind of in no man's land here. It's just a matter of determining what you want to fight over. 10% to the downside for more opportunity, or the 40-50% gainers plus some if they begin to have to short cover up here on Dogecoin, and then those Etf inflows come in, then you can really see this thing pump. I'm not saying it, but I did see some data out there that's pointing to like a potential 12x here, so it's 1,200% return. Can it do that? I mean, it is a meme coin. Everyone knows Elon loves this thing. If he integrates it into Tesla for payments, etc., sure, hell, it could run. But can you count on that? Probably not. I mean, the last time he pumped it on Saturday Night Live years ago, that's when it crashed. If you don't remember. But again, I'm gonna leave this zone highlighted. Obviously, we've got the upper highlighted. Our hot sensors on Doge right now on the daily. You can see this. Remember, upside or downside, white, gray, blue, yellow, orange, red. Orange and red are typically where we want to take action, and that's why I'm saying we're kind of in no man's land. Is short term, medium term, long term, they're all white or gray. So that's pretty, and all three are actually below the midline. So what I would say there would be if we start seeing a crossover, that's more positive momentum in my mind. But as long as the short term is below the midline, I don't necessarily. That's why I would say it's more likely to reach the 18-cent mark as long as it stays below the midline. If you start seeing this thing cross over, it would still be white, and then it would resume to the upside: white, gray, blue, yellow, orange, red. But yeah, if it crosses over, I'd probably go ahead and pull the trigger for me. I don't know what you want to do, but so let's look at the weekly. This is awesome. So this is Dogecoin on the weekly. This is back in November of 24. Look at those. Those dark red diamonds are level 3 diamonds. Level 3 diamonds are our favorite indicator, especially when you line up here. Look at this. Hot sensors on the long-term viewpoint, being the weekly. Red, red, extreme peak. You got your dark blue X's, you're well above the extremes with the white line coming back down. That screams, get the hell out. Okay? And that's why I'm bringing this stuff to you, because I want to. It's not because I have to. This thing does me very well. I make no money bringing these videos to you. I got less than 500 subscribers. Very probably unknown channel, but this thing is truly remarkable. So that's how you know I'm pretty genuine here. I'm making $0 off of my community. So, but just look at that. Peaked it out, crushed it. So here comes your downtrend. And look at this cluster of level 3 diamonds on the downside. And what I tell you, we typically like to be in orange or red zones. Literally at the bottom here at 14 cents. So even if you did that, which is back in March of this year, I mean, what is that? 14 to 20. It's almost 40% roughly since that. And that's just based on, and that was right off the support line there. I think that's that looks like the 100-day moving average actually. So yeah. So awesome stuff there. Now you can see we did have one little pump up here in, what was that? July of this year, where we hit a level 3. And look at where we were. Red on the medium term, red on the short or long term. So truly remarkable. What did it do? Tank back to the cloud. And now we're on the downside of this cloud. Now, again, these are leverage levels that I've called out with these opportunity zones. And you'll notice that one, that 18-cent mark, it just so happens to be on the weekly view, the 100-day moving average. It's amazing how that works. Worst case scenario here, I think it would liquidate a lot of folks, but you can see a pump down or dump down to 14 cents. That would bounce right off your 200-day moving average. And at that point, you know, in the short term on the weekly, we're already down below the midline here, so that is negative. So I think given that, I would love to see this at 14. I just don't know if we're going to get it. So that's why, because on the weekly, because of the short term being below the midline, everything else is kind of deteriorating. I would probably wait for this. I would wait for this short term hot sensor to get back above the midline on the daily view. That would be my first kind of hot zone there, if you will. So yeah, a little pressure here, but let's go back and look at that one last time. 4 spot ETFs incoming for Dogecoin. Let's go on the high side. We did the low side. Let's do the high side. 14 billion. That's 20 bit. 34 billion. 49 billion. 59 to 60 billion dollars. I don't care what token you are. If you have $60 billion inflows, that's going to be truly remarkable. And I don't think it stops at 27, 28 cents if you get 60 billion in inflows. But that's just my take. Again, not financial advice. Hope you enjoyed it. If you get value out of technical analysis on cryptos and stocks and want content you can't get anywhere else, please like, share, subscribe. Hit the bell notification. Let's get people informed and educated. That's my whole goal. Again, Jason, creator of the TCP Super System. None of it's financial advice. We'll see you in the next one. Have a great Monday night, and we'll see you later.